All right. Good morning, everybody. So we have an FOMC today. We also have a very positive market based on reasonably good news coming out of the peace talks. The the move we've seen in the market in the overnight hours is directly connected to that. Now, Putin made a comment the other day on Friday morning before the market opened, and it really spiked the market to the upside, but it immediately started to sell right back off again when Bloomberg and others pointed out that Russia's basically been lying about everything, and you can't take anything that he says without also looking at anything that the other side might say. Now, apparently, this morning or when this overnight news came out, they're also getting confirmation from the other side, right? From both parties this time, instead of just having Putin out there chipping his teeth, which is why this move stuck more than the other one did. But we still want to keep our eye on this. If the talks begin to down, if more reports come in that that the shelling or the fighting is intensifying or getting worse. So just keep in mind this move this morning is directly connected to the warm, fuzzy feeling that people have on an expectation that this crisis may finally begin to be with an end in sight. We do have the Fed today. Just keep saying it over and over. We have the Fed today. We also have Ukraine's president talking today, and we have our president talking today, and we have a lot of other economic events on the agenda today as well. It's a full house, it's a full day. Also, keep in mind we are already up 1.25% in the S&P. So we want to come into Market Watch. We have the dollar opening at 8 a.m. The bonds open at 8:20. CPI at 8:30. Business inventories at 10. Petroleum status at 10:30. That's the USO play. So like set your alerts, go in and trade USO, or be prepared to trade USO when the report comes out at 10:30. It's often a really great trade opportunity. And then we have the FOMC announcement at 2, and then he'll be chipping his teeth starting at 2:30. Usually goes for about an hour. Um, if you've traded previous FOMC announcements, what you want to see is not the initial spike, but the follow through. What you're looking for is the market to stick a direction and stay with that direction for the rest of the day. If you go back and look at the last FOMC, there was chop at first, kind of some reasonably decent spikes, whipping in both directions. And then the market just stuck, picked a direction, and it continued to move in that direction, consistent and persistent. We had AD, tick trend, UVOL, DVOL, everything confirming the fangs, the cumulative tick, everything backed up that move. I had a lot of people say, "Oh, I should have traded it, but I didn't because I didn't trust it." I don't blame you if you don't trust it, but that's what all of those tools are for, is to help you validate what it is that we're looking at and get that confirmation so that you can trust it and you can take the trade rather than just sitting there on your hands watching it run and being upset that you're not in it. Yeah. Yeah. Okay. Move on from that. So we had a nice move in the overnight hours. We're already up 1.25. The ADR right now, which is an average daily range, is 2.7%. The way that we get that number, Let's go to the ES instead of the MES. The way that we get that number is we look at the last 21 days. 20 days is a market month. We look at the last 21 days and we look at the average move per day from its highest point to its lowest point. And after looking at the last 20 days, we try and define the average of those days. What's the average move in the market on a day-to-day basis? Well, right now, the average move in the ES market is about 2.7%. We're only up 1.2. We could easily move another 1.5. Yeah, see how that works. You like it. We do got some resistance coming up back yonder, right around 43.20. First touch rejection play zone. A move back down very likely will move back through 4260 area. Oh, excuse me, 4300, the roundy. Move right through that. That would be your only defense to a move back to the downside. If we manage to make it through 4300, we're very likely going to reset down to yesterday's high. That would be the target, 4262. You want to validate that with some volume profile. And you can see that overhead resistance, that large volume shelf with the value area high line. It's always good to confirm that we're not just randomly drawing lines on the screen. Get some crayons out. And then you can see how it gets shallow and then starts to build back up around that 4260 area. Yesterday's high. Yesterday's high is also an institutional pivot point. If that word bothers you, try universal pivot point, right? Because it's not an institution like the institutions, right? It's just a universal pivot point. Why is it universal? Because you can't screw it up. It won't matter if you're new or you've an experienced trader. It won't matter what time frame you're on. Yesterday's high, that's yesterday's high. You can't screw it up. You can't get it wrong. One thing you're going to be wanting to keep an eye on is a trend line breakover, right? No reason to really worry about, should I do the wick? Should I do the body? Should it touch this pivot or this pivot? You're looking for price to break this trend. It is more about a visual confirmation, a contemplation of the break of the line, right? Not a specific little nuanced to the penny break of a line. You are trying to validate that this move in the market is done. Speaking of the move in the market, when we back out a little bit, get some perspective, price aggregates. See that? We're back up to the top of the range. As I said Monday, we were very likely to maintain this range until the FOMC day. Well, we went to the low of the range, and now we've gone to the high of the range, and now it's Wednesday and we have FOMC. Wasn't that hard to figure out? Until he gets out and starts talking, it's all going to be news based. It's going to be the economic events we already talked about and any additional news that comes out of the Ukraine. So just be very cautious, be prepared to continue to lock in gains, and don't get caught with some kind of fake out, right? We've already ran a long ways. When we come into the open, and we've seen this kind of move before, where we go into the open and we spike really high right off the bat, say a good 15, 20 minutes, and then it spends the rest of the day dumping back down to where we ended the day before. I'm not saying that that's going to happen today, but I am saying we've seen it often enough that it's almost a common theme, right? So be on the lookout for that. I don't know if you guys seen that head fake last night in Bitcoin. Absolutely amazing. I was kind of jumping through the different stock twist chat rooms and looking around on TradingView last night when this was happening. People got ripped apart in this move. Money management, guys. Money management, right? So gold's picking up. This is a hedge play. Keep our eye on this. It's usually been correlating lately. It's been correlating quite well with oil. You can see we're getting a bump here. We're getting a bump there at the same time. The bonds, not quite making a lot of sense, right? What we've been seeing in the bonds has just been mind-boggling. They're not doing what they're supposed to do, right? So the main thing when it comes to the bonds, just look for really big, drastic changes in market sentiment, right? Like yesterday, topping pattern, deep, very fast, sharp reversal, kind of validated the move that we were seeing in the futures over in the S&P and the Nasdaq. Just absolutely amazing moves. Got the dollar breaking lower. Yeah, it's going to be a day. Going to be a very interesting day. Watch these tools, guys. These are the warnings that can help validate what it is that you're looking at and confirm the moves that you see, the breakouts, and is it going to stick, and is there enough room for me to get a trade? Should I lock in my profits? All right, so we talked about the ES to the downside. What about the upside? What if it does break out of the top of this megaphone pattern? How much farther could we go? Well, we got a 2.7 and we're only up 1.2. So let's just put on another 1% and see what that gets us to 43.54. It kind of ties us in to this previous price action back here. That would be last Wednesday and last Thursday. Checking that on the volume profile just to validate and make sure, we're not randomly drawing lines. You can see we got a reasonably decent volume profile in that zone. It's going to be an area of resistance. Very likely going to be a first touch play. When it comes to these first touch plays, an impulse candle or just a large spike in volume, large spike in price action is much more likely to take a rejection than a slow grind in the general direction. Right? Makes sense? When you have these very large candles, these impulse plays, they don't have anything behind it to hold it up. It creates a liquidity vacuum. So as soon as we hit something, it begins to fall back. As opposed to a slow grind, candle after candle after candle, just moving consistent and persistent, pressing up against that zone is very likely to keep going. So we have a gap. At the open, we anticipate a gap close before anything else. Right? This is a very normal, very common thing. When the futures are gapped up in the overnight hours, when we open, we expect to see red candles, not because we're bearish suddenly, but because we expect to see this market attempt to close the gap. We've already gone too far for just a gap close and then a continuation. If we start moving in that direction, it won't be just to close the gap. Right. So if you were to go back and study what the futures look like when they gap up in the overnight hours and then open near the top of their range as we go into the trading session, on those days where it didn't attempt to go down at the open, that it just stayed up and then continued to go up even more, that is one of the validation criteria for a trend day. Not a day where we had some trend in the market, but quote, one of those days. And anybody who's been in my coaching courses and have gone through trend days, you'll know exactly what one of those days are. One of those 4 trend days. We are primed up for having one of those today in either direction. But what we're looking for to the upside breakout in that trend day is that we're going to open near the highest point of the Globex and or above that blue line there, 4,300. And that instead of closing the gap, instead of seeing the market even attempt to close that gap, that it continues in this bullish nature and goes to the upside. Run it as far as you can run it. And you're looking for any reversal before 10:15, preferably 10 o'clock. You don't want to see this thing heading to the downside before 10 a.m. because it's very likely going to kill any opportunity for a trend day. And we're going to go back down and validate yesterday's high. Right. But if it is one of those days, we already know what that means, right? We stick it, we run it the whole way. It's your opportunity to get an entire month worth of day done in a single trading day. You don't fade the play. You don't run contrary to the move. If we're going to get this move, we got to have the sectors. One of the things that we look at constantly when we're looking at a bullish day is emerging markets, EEM. This is like an indicator. I don't trade it. I don't want to trade it. I use this for a gauge of global participation. If we are on a risk on situation, if we've got global markets and everybody with this warm, fuzzy feeling and they all want to pile in and run this thing in one direction, you'll always, always see emerging markets make those moves, right? You'll always have that behind the market. Another one that you could add in, we don't really talk about it that much, is junk. I know, right? What a weird name to add to the perspective. Junk, J and K. We also got the airlines this morning, got Bitcoin, got the energy markets, technology, finance. I've said it before. I keep saying it. You have to have one of these two, technology or finance. If you have at least one of those two, then you have at least the Nasdaq or the S&P. When you get both of them, you have the potential for an amazing trend day, an absolutely phenomenal rip your face off rally trend day. Careful though. Can't tell you how many times we've seen this where we gap up in the overnight hours and we go into the open at the highest point of the Globex. We get that nice little bump, that 10 or 15-minute rush to the upside, and then they flip it over and crash it down on everybody. One of the ways that we can validate what we're seeing this morning is being able to quantify specifically how many companies are participating in this rally and how strong is the rally. So we're looking at the S&P 500. We want to filter that down to just 100 names. Pre-market change percent, adjust the color. This is what a risk-on environment looks like. Got every single sector participating, and it is almost exclusively bullish. Yeah, there's a few names in there that really haven't done anything or that are slightly red, but Lockheed Martin and Raytheon are in a peer group, right? It's not just one, it's both. Other than that, I mean, this is overly bullish. We're going to quantify how bullish in a minute. So let's take it from the S&P 500 over to the Nasdaq 100. Pre-market change percent. We don't need a filter because we've already got 100 names. Adjust the color scheme. Risk on again. Same scenario, same situation. Almost exclusively bullish. But we need to be able to put a number on it. How bullish? So how many names in the S&P are up at least 1%? 40. 40% of the S&P is up 1%. That's considerably bullish. And we can back that number off a little bit and say, well, how many names are up at least a half of a percent? 54. That's not bad. I want to see it higher than that. I want to check that again as we come near the open. We want this to be 75, 85, 90% of the S&P up at least half of a percent. If we get those kind of numbers going into the open, we could activate the alpha protocol. Same thing for the NASDAQ, same numbers. How many names in the NASDAQ are up at least 1%? 44. That's how many names in the S&P were up a half of a percent. So 44% of the NASDAQ is up 1%. That's a good number. That's a really good start. That's a really bullish number. We want to check half of that. How many names in the NASDAQ are up at least a half of a percent? 47. Not the number I'm looking for. So we want to check this again as we get closer to the open. We want to go through these names and find a consistent theme. Which sector is the strongest sector coming into the open? Which names in that sector are the most heavily weighed names in that sector? Who's impacting that the most? Which ones are the most liquid to trade, and maybe even has a daily chart setup, trendline breakover, IX10, inside day breakout, red to green, some daily candle signal that validates your watch list and the criteria that you're using as we go into the open, so that you're not trying to watch 30 or 40 names, you're watching 2 or 3 names. Or that we activate the protocols and we run every name. If you want to run every name, something like a 42 to 45 delta in the options would be the target. Even the utilities this morning are up. You got your offensive sectors, defensive sectors, and then your midline sectors. Everything is up. Looking at the liquidity list that we got from the CBOE, if we use the criteria that names need to be up at least a 0.5%, then well over 90% of the names on this list are up that much. This is the day where we can run the sectors. We don't necessarily have to run our own watch lists. If you were to run your own watch lists, however, I would still focus on the high-low graph from the Thinkorswim. Come back up and hit the NASDAQ since we didn't cover this. It's got an ADR of 3.6%. We're only up 1.8. So we have the potential to really continue this move through the open. There are some resistance zones from Wednesday, Thursday that are over our head, need to be dealt with. We do have that very large megaphone pattern, and it's exactly what we talked about the other day, that we were very likely going to hold this range until we get the Fed announcement. So we've hit the low of the range. We even set a new low, and now we're back to the high of the range. Validate that with the profile. You see we got a lot of support around the point of control. It's that red line. And unlike the S&P, the overhead resistance is not lining up with the value area high. So if we happen to get through 13,800, we've still got the value area high at 13,900. And if you're thinking that those are just too far away, remember that we've got an ADR right now of over 3.5%. So even if we moved another 1.5%, that would only get us to the top of the value area high. It would be very, very bullish to see a move like that, right? It won't be subtle. And we've got so many economic events coming through the day today that it's going to just be really hard to imagine we're going to have that kind of a day. But again, we can, right? We can. We've seen it before. We absolutely can have one of those kind of days. Just be prepared for that fake out breakout, that rip to the upside that just completely crashes, flips over, and dumps everything on your head. You'll know really quickly in the morning, right? We'll get into the RTH or into the regular trading session. It will not take very long at all. Within 15 to 20 minutes, We're either going to attempt to close that gap or not, right? And by not, it means we're just going to continue moving in the same direction to this upside move. The really good thing about the gap close is if you anticipate the gap close and start running it to the downside as we move in that direction, if we don't just close the gap but continue to fall, you're already short. You're already short off of the highs. So, one of the things you want to watch for is we've got economic news coming in, and we're very likely going to pull back due to the economic news before we get to the open. So then we're not sitting at the highest point as we come into the open. And then at 9:30, the bell rings, we start ripping back to the upside. And now there is overhead resistance from the Globex. That's going to be your flip reversal spot. If instead we're already down, say, 786 pullback from our current location, we come into the open and it starts heading to the downside, you've already got your target yesterday's close, right? And before we get to yesterday's close, yesterday's highest point, it's going to be your resistance. Very simple, very easy to map out. You got to think ahead of what it's going to look like. You don't even have to imagine what it's going to look like. You can go in the past and find previous examples of this. That's the best thing about trading the futures. These charts, they just repeat themselves again and again, just like a cup and handle, a flag, a head and shoulders, the entire day itself, from the Globex open all the way to the close at 4 o'clock, the entire day, the shape of its day. We've seen it before in all of its glory and in the entire pattern. We know exactly what it looks like. If you go back and find old examples, you will be able to anticipate what it looks like. And if you can see what it looks like before we get it, you'll begin to recognize when it starts doing something it shouldn't be doing. I will be streaming in the large caps this morning, 9:15. See you all there.